Good evening. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday, the 22nd of October, 2024, about 6:30 p.m. Central Time. Getting a little bit of a correction today. Now, it was a mixed day. You had a down day on Monday, and most of the indices, cash markets, closed lower again. You haven't had 2 days back-to-back in a while. I found that interesting. Metals were on a tear to the upside. Gold, $27.60. Silver up to the $35 an ounce area. And the dollar continues up. And yes, if you watched my currency report that's on our website at iraepstein.com, pay heed. That goes off the board, by the way, tomorrow, Wednesday. So you want to get it. I don't know your time zone, but it will be off Central Time tomorrow. So do pay attention. Go take a look at it now. It's at iraepstein.com, and just look on your left. You can't miss it. It's up at the top. Give it a click, and it'll take you there. All right. Here's the real dilemma the market is having, though. The market is having a dilemma in that interest rates just continue to climb. You're at 4.2% on the 10-year. Now, are we going to go back to 4 or 5 is what traders are asking. The next question they're going to ask is, with the market doing this, what is the need for the Fed to keep cutting rates? That becomes a big question. The need for the Fed, I can answer it, is if inflation is falling and if employment weakens, there are 2 mandates, that's when they'll cut rates, regardless of this. But we've seen labor hold up, so that's what you've got to pay attention to. And we're seeing the general economy holding up pretty well as well. So that becomes the problem. Down the road, there's a price to pay for all this. You cannot keep spending money more than you take in and run these deficits and not understand that more and more and more of our tax dollars is just going to pay debt, not to create anything other than that. And while either party that comes in spends and gets you happy and you smile, understand what's going on, because it's going to hurt you and your kids after this. There's no ifs, ands, buts around it. We need to get spending in America under control, and neither of these candidates, at least at this point, will talk that. Whoever gets in is probably going to run into a Congress that finally says enough. That's what I'm predicting will happen, unless you get a sweep of one party or the other, and I don't expect that. On the energy markets, a little bit more of a rally today. Okay, nothing goes down forever, but I just don't see the demand that is there at this point. Maybe before we do this, we should take a look at the news tomorrow. We get the Mortgage Bankers Association number coming out, and we'll see what mortgage rates have done. That comes out at 6. A little later in the week, we'll hear from, Fannie Mae, and they'll give us an idea of what the interest rates are doing. Existing home sales data for September will come out by the National Association of Realtors at 9 a.m. Central Time. So keep your eye on that, too. Last month, we had 3.86 million homes sold. They're looking for a little lower number right now. All right, so let's go back to the charts. And let's start here. If we finished in the S&P here, you're down for the week 0.38%, not doing real damage. In this chart, we're rolling down a little bit, as you can see. Now, it's interesting because today I had orders last night from my subscribers. I told them to buy, and then the market lost its embedded reading. It came back up, and I told them, hey, you can scratch the trade, anything like that. And they were able to do that, I believe. Just didn't like how it did. The SPY held up better than the futures. Lower highs, lower lows, the market pointing into a downtrend. Could the market be headed to the 18-day average is the question, but fighting this, you've been fighting at the Bollinger Band for resistance, and now fighting the break, supporting it in plain English, is the fact that you're still embedded. Now, today you got down to the 78 level. I was looking at it, so I know what I say, and I was looking at it about 3:30 in the morning, 4 in the morning Chicago time, as prices were coming down into the buy zones, and it lost its embedded reading, then it came back. And when it reopened today, it still has it. So I still think that the pros are buying it, and they'll come out if they lose the embedded reading. That's how I read it. You don't have that picture in the NASDAQ. You have an overbought market that's in an uptrend. Support is back at 203.23. In the Dow, you have a market that is breaking down now under these lows. So it's just getting over here. And in fact, I think it took that out. I think I should have had an arrow pointing down, but let's just double check. I'm pretty sure I'm right. The low here was 42,936, and today's low, as you can see, was 42,945. No, it didn't take it out. I'm so far correct. So my arrows are correct, but you're not embedding. You're in the middle of a correction. All I've looked for is the 18-day average on the correction from overbought, and you're getting it right now, and you're there already in the Russell. So that flurry into the Bollinger Band, and I so often talk about that, not embedded, overbought into that. I said I thought the pros were taking money off there, and they ended up doing that. When you look at the bonds and notes, as long as you have this pattern, which is called embedded, it's when both the red and the blue lines are underneath 20 and going sideways to lower under that for several sessions or more. I use the word sessions because if you take my course, it could be 15-minute periods, 1 hour, daily, monthly, weekly. A session's a session. And each bar is a session. Well, when that's happening, I think the pros are continuing to sell the market. There hasn't been a good rally to sell into. What else do you notice on the chart that's problematic? Take a look. I had a quiz. Your 18-day average is now underneath the 100. So that's more of a bearish setup. You're knocking on the door of doing it right now in the 5-year note. Still bearish as can be here. The dollar index has the bullish setup. Market keeps climbing to the sky, and the euro keeps coming down. Bearish setup. So the rallies like you had over here the other day, to me, that was the sell opportunity in the market. The British pound continues to fight a huge battle right at the 100-day average. It's still embedded. The bears are still in control, but they're using power and they're not getting anywhere, keeping it down here, and I'm unable to break through to the next level of support. In Bitcoin, you broke enough today to take out this low. So you got overbought against the upper Bollinger Band. You're correcting. If the market starts coming back through the lows of 66,570, you might be suddenly looking back here. But in fairness to this market, in a bullish posture, is the 18-day average got over the 100 right here. That tells me on breaks, you're going to see buyers in the market. A lot of traders are going to look to get over that 70 level, the 70,000. If they can get over 73, they'll say the market's on their way to new highs. In Brent, you came off these lows into the 18-day average, and now you're probably going to stall out. You've broken the downtrend. That's the important thing with the market, but it hasn't established an uptrend. You're doing the same identical thing here. Look how the market took that high out right here, went to the 18-day average, and yawned, just ran out of steam. But it's broken this whole downtrend that's taken place. So now the bear is not alive there. The bear is not alive on the heating oil. The market's still bearish in the nat gas, but here's what I'm watching. If you lose the embedded reading by a closing over 21, I'll look for the rally to extend to wherever the 18-day average is, and that could be the opportunity to look at another short position after a bounce like that, if it can get that far. So those are the things I'm looking at. Remember, my dollar report that is on the website now goes off tomorrow. So you want to get on that tonight, tomorrow morning. It'll be off sometime tomorrow evening on Wednesday. You go to iraepstein.com. You'll see on the top left the currency report, or you can move your cursor to the top at any point. You'll see an icon. Give it a click. I'm Ira. I'll catch up with all of you tomorrow. Take care.